Did you miss me because I missed you? We're back with another weekly report. I took a week off, went on vacation, had fun in Tennessee. Wonderful time. Fantastic time. The last time I'll probably ever take a vacation and not have to worry about kids. Yep. I'm just kidding. I'm excited to be a father.
I was down, but now I'm up. Yeah. This all God, this ain't no love. Yeah.
Before we talk about this market and the setups we're seeing, what's going on with earnings season, what economic data to watch out for, I do want to mention that I finally have completed the Actually Good trading course. And make sure you actually read the description of the course before you purchase it. Okay, this is not really intended for people who are brand new to markets, who really don't know what a call is, what a put is. There is some content here that will help you kind of learn the absolute basics, but generally this course is to answer the things that AI won't. Okay, AI does the good job of covering the basics. This course is for what you need to actually get over the hump of, like, I know how to trade, but I'm not profitable. This is the leap from having the info and now learning the proper execution, learning the advanced risk management, understanding how to customize your brokerage app. All of that is included in this course. And generally, I do want to say that you can probably pick up most of this information through watching these weekly reports. But again and again and again, I get requests to just neatly package it. This is kind of early access because it's not built up on the website. I'm doing huge updates to the website. There's so many big things coming for NBT. We're working hard. I'll say that. Anyways, let's hop right into the weekly report. So last week we kicked off earnings season, and I mean, just based off price action alone, you're not really getting the confirmations that you want that can make the indexes kind of easy trades per se. You're kind of getting a lot of chop here, especially from the S&P hanging at all-time highs, a very frothy market. Even as we've seen volatility come down, we're not really getting the best follow through to the upside, which could be a cause for concern. Some people are looking at things like QQQ, and we can see this clear diagonal pattern. These usually turn to reversals of a greater trend. So we can see the greater trend is to the upside. We now have this diamond pattern. If there is a break to the downside for this into next week, it could lead to some day trades. Personally, I think the easier trade is actually if you break 490, then you have an opportunity to take some shorts and just kind of simplify that. The market turns over, ends up getting weak, something happens, some sort of catalyst is a downside driver. I'll just play the index to the downside, and then I'll look for individual stocks to the upside. And we've seen that every earnings season, of course, Netflix rings first one to ring the bell. They had a great earnings, and they actually gave out some great numbers. The expected to have an estimated 50% increase to ad revenue. And when I hear news like that, my eyes immediately go to Roku because it could be a great catalyst for Roku. It's played hard to get, but we can see that there's a clear trend to the upside. I would really prefer to see Roku over 82. This is a pretty big key level where we could actually start to see some bigger moves here over 82, the potential to kind of fill this gap further to the upside up to 95. So that's one thing on my radar. But the big things on my radar right now, and what I really want to focus on this earnings report, is Bitcoin and gold. Gold, I mean, look at this rally. This rally is insane. I came in on this dip and I bought some more calls, and I really haven't played the rally on gold the best. Let's be honest. I really haven't. I've caught a lot of moves. I made some great money here, both on gold and gold miners, but I've just repeatedly getting caught off guard, and it's probably leads into the greater narrative of the dollar milkshake theory is probably what's playing out here. This is investors telling you that the only thing that they think is really a safe asset is gold for months now, especially since we haven't really seen some great follow through from TLT, even though TLT's been a great trade that I've loved, and we've made some money here. I've taken some positions. It was in my long term. By the way, since I sold it, it's gone nothing but down. But gold is just firing to the upside. And when we look at the larger product here, I'm looking for this to go to 3K. So I'm looking for pretty much a straight move. You just buy all dips that come here, and you just look for a continuation to the upside. Gold looks amazing. And now let's talk about Bitcoin, because this is the trades you don't want to miss, okay? You're going to feel bad if you miss this. Bitcoin looks like it wants to go and rip I mean, we got the break of this structure. We got the confirmation to the upside. It's like 69,000 right now. I am already loaded up in these positions while on vacation. I told Discord members, like, this is my largest position right now. This looks like it's on fire. And there's a lot of great setups, but not a lot of great follow through. When we look at like tech, we can see that actually there's still really high demand for value and kind of safe assets, and not so much in tech, even as tech is breaking out. Very weird dichotomy going on there. Price action choppy, but for gold and for Bitcoin and Bitcoin related products, you're getting all the confirmations, you're getting all the price action. These are the trades you don't want to miss. When the rest of the market's kind of iffy and then these give great follow throughs, money chases it for performance. Okay, so you got to keep an eye on these miners as well. I know the market's telling you with the price action that these aren't really that appealing, but the thing is that also is reflected in the options market. And if you remember, if you've been following me for a while, our second or third best trade this year was Mara. 5-digit days, catching this from February and then also into early March. We got here from these huge explosions to the upside, and these options are not priced the way, pricing in the violent moves that this stock can get. Another one, BTBT, I have large positions in. This has been a much better performer than Mara. When I came in and bought the dip here, and there's a lot more upside that you're looking for here though. So what you really want to see is us get over this 528, and obviously we have like a full dollar still to go, but if you can break that, that's when you're going to get some really violently explosive moves from BTBT. But it probably has the most upside potential. Now where we are, what is more easily tradable as a day trade would be your Coinbase and your MSTR. Since MSTR has been really fun to trade, especially since after the stock split, this is now viable. In my opinion, it was not viable before the stock split. It was just way too expensive. Spending $5,000 on a single contract is not the type of risk I like to manage or swallow. It makes it really hard to play things like lottos or daily positions, just because your risk is so outsized, and it just really... It's a psychological thing probably to some extent for me. I just don't like spending that much on a single contract. But anyways, even though on other products I'll buy like 10 contracts and have relatively the same amount into it, you just don't have the same flexibility with like, okay, I could sell 1/5 of my contracts at this right here. You don't have that same methodology that you could play out for your risk management when you pay so much for a single contract. So it just hits different, right? So post stock split, this thing's been amazing though. So you get these nice break moves, look for a continuation over Friday's highs, and then you can play that. You can look for 230 back to the upside. This thing has the potential to go to 250. Coin is giving you all the signals. Coin looks even better than MSTR. This thing probably going to go to the 230s here. From here, we're looking for a continuation basically of this trend. 239 is the next high that I would be looking for. And I'd be taking profits along the way, as always. Looking for a continuation. I mean, again, Coinbase has the potential to come back into, the upper 200s, maybe even touch 300. If Bitcoin breaks out the all-time highs, this thing can go absolutely nuts. And watch those miners, because they can go crazy too. With the miners, I've taken the longer positions. Contracts are so cheap for BTBT and for Mara right now. And on the shorter time frames for day trades, I love trading coin and MSTR, but they're so expensive. They are priced more efficiently on longer time frames, whereas Mara and BTBT just aren't. Okay, so these are more appealing for me to say, okay, let's say Bitcoin goes to 200K. Are the miners still going to stay where they are? Absolutely not. I don't even care if the business models suck. The hype alone will take these to irrational valuations. So I buy the long dated contracts there, right? Especially while they're stupid cheap. You can buy Mara contracts at like a $35 strike and still carry like I think even a delta in like the 30s. That's fantastic. So And for like $1.80, crazy. Mars should not be trading like that. I think the market's being really inefficient right there. So I like buying those far dated contracts, and that's the way I'm looking at it right now. And so, the last thing I want to cover is CCJ. This thing's been an absolute monster. I bought the dip here with shares, and I do have some options. I wish I bought more, and I wish I bought sooner, to better reflect by, when I bought the stock, I should have just bought the options, and I didn't. But we're making some great money here to the upside, and basically I just buy all dips from here. With the catalysts that we're getting now in uranium are probably the best we've ever had, with big investments coming in from companies. They probably won't get follow through, but typically what we see is the money front runs the litigation. So once the money's looking for a home in uranium, and so we're seeing lots of deals be made, but they kind of have insane goals that have to be met. So like if you meet these certain goal lines, then we'll invest this amount of money. And they're not the best deals, but it's the sentiment that should be exciting. The sentiment is that big money wants to find a home in big uranium investments and nuclear investments. And so the litigation is likely going to follow as there's a big push, a big sentiment change. People are starting to realize, holy cow, we need nuclear to power the AI, to power the robots, to power all the technology of the future. Is going to need to come from bigger and more efficient energy sources like nuclear, which is clearly, undeniably the best and also the safest. So I'm super excited. I buy a lot of dips here, and I look for more upside there. So to kind of wrap this up with a nice little neat bow, is I want to play QQQ to the downside because it's where the relative weakness is broadly among tech. There are a few standouts like NVIDIA. If you get the break here, I want to play the individual names to the upside if you get some nice follow through. This week, you also need to keep an eye on Tesla. On Wednesday, we're going to have Tesla earnings. They took a beating after the robotaxi event. I understand it, but at the same time, I'm fine with letting this play out. Of course, my average on my shares, and again, this is my largest position for my shares, is still great. I'm still up on profits. It doesn't mean that this violent move to the downside didn't hurt, because it definitely did. I didn't like it, didn't have a great time. But honestly, I think that if you are bullish on Tesla and you're looking at this market right now, and we get some great confirmations, maybe you want to wait till post-election where maybe a lot of uncertainties will solidify for the market. And then, in a year rally, Tesla can easily still, even from this point, hit new highs for the year. We could still get a push to 300 from here. Okay. It wouldn't take as much as the market thinks right now. So it's more of a lotto at this point, but I think as you start to get some more confirmations, it's definitely doable. And so I'm really not worried about my long term here, but keep an eye for Tesla and the earnings. It might also have a great setup, especially with the stock at the valuation that's at right now. It could have some great upside potential. You're gonna have to see how those contracts are priced on the options. On Thursday, you also want to be aware that we have jobs numbers and also the PMI data, so careful trading into that. And that's going to be it for this weekly report. I am super pumped. I'm feeling refreshed after vacation. Probably do some live streams, and we're working on a ton of stuff. I worked literally all weekend, and I'll be working from like day to night for like the next 2 weeks, because we have so many projects that we're working on all at the same time. So it's going to be a ton of fun. It's going to be a lot of content as well. And I will see you guys on the next video or the next live stream. And God bless.